Burak. Really, always a pleasure to spend time with you, and I'm proud to have had the chance to visit back and forth Istanbul, and a lot of things have been, of great value for me personally in terms of just meeting with really nice people and learning a lot from everyone else. What I wanted to talk about today, just to give you a brief, probably a brief background about what I do now. I basically sit between two main areas of focus. One, I enjoy the exercise of developing programs and accelerators that are theme-based. So, we do a lot of areas related to that specifically. And then we also work on fund management and investing into different stages of the life cycle that a startup goes through. And across that experience, one of the things that I felt were really important was the area that value creation represents. So the discussion today, it's more going to be a discussion. It's going to be really brief, so that we can have more of an open discussion around the things that we wanted to do. And the purpose is really just to stir, a discussion around these different points. But value creation has to be top of mind for any founder of any startup. Okay. And value creation is going to coincide hand in hand with whatever valuation you want to have and whatever type of investor you want to bring on board, and how do you want to guide the discussion going forward. And it's universal probably. In our case, I think me being in Amman in Jordan, having worked across the Middle East and North African area, having been involved in different areas in Europe and also the US specifically, has given me an important highlight that value creation actually in our markets, in areas where they are fragmented, complicated and complex, is very important. And also at the same time, it's something that we can do in some cases easier than others. So when I say value creation, I want us to highlight a couple of points. One, value, some people might tell you, well, value is, my last round. I did $300,000 valuation, or I got a $2 million valuation, and that's the last valuation that I basically have. And that's the basis by which you can go and say, well, if you came 6 months later and you wanted to do another round, then probably if you were saying 2 million, then, or if the base was 100, then probably you need to grow that base by X percentage. But that's not really, a good element of, or a good baseline for assessing what your value should be, right? Now, the second point, which is really, I think, the area that you all need to focus on, is what did you do? What are you as a business, right? What did you achieve? What can you protect? So do you have patents? Have you done any specific certifications that validate the tech that you're working on? Do you have someone who is validating your technology? And I'll explain that a little bit. And I'll come back to them all. But the team structure, is the team in itself a driver for value? And are you adding the right people to your organization? What type of products do you have? And of course, the markets that you exist in. Now, the other area that you could always use in assessing the value of what you want to achieve is that you look at, you compare yourself to others, right? Or you have your own track record. So, you've done this before, it's happened before, therefore you have a good track record. You've built a startup, you've exited, people feel confidence that you can really drive the value forward, and therefore, they'll make their investment. In essence, it's their investing behind you and your track record before. And the golden standard, of course, is revenue. I mean, if you have the right revenue and the right growth in revenue, then that plays a major role in driving your value, right? Or in creating value for your business. So let's look at these again. I'm going to go back to the point which is related to legacy investment. Now, in some cases, some businesses, you need to look at the journey of what you want to achieve, and the capital that you want to raise across that which is okay. So if I were of X, I need to basically see whether or not I can get an investor to buy into my business and believe in it and give me the investment that I require and need. But one of the things that I really find interesting is the early adoption of your technology, right? Whether it's from the customer base that you're targeting or from a technology partner that you're working with. It could be a client. Let's assume you're working in something in the urban space, so it might be a municipality, or you're doing something in the health sector, so it might be a hospital, or a group of physicians and doctors that might be very much involved in what you do. So it's important that you map this out, and this is how I would advise the people around the table today to work on this, which is mapping your journey, right? And you map it by telling a story. So the first point, let's assume that you're a business, a startup, a company that began in the beginning of this year in 2020. So you started in Q1 2020, and you are in a market. So you entered market A. You could be in Amman, you could be in Istanbul, you could be in, I heard some of the cities. You could be maybe in Manila in the Philippines, for example, right? So if you're in a specific city, you need to define in a well-articulated manner what is the market that you're entering into. You could be in Amman, as I said, but your market entry is North Africa. It could be Cairo, it could be Beirut. So you have to define in a well-structured manner, and then you need to map this. You need to think ahead and draw this even before of what you want to, even if you haven't delivered the actual requirements of what you want to achieve. But it allows you and it guides you through the process of how relevant are you to the people that you want to talk to. If you pop up in my face for the first time and you come and tell me, let me introduce myself and I've done this and that. If I'm not part of your story, I haven't heard about you, then probably it'll delay my decision-making process. And it might not allow me more or less to even make the investment decision because you're far off, you're not close to me, I don't know much about you, I don't know much about your team and so forth. But it's important then that you, as I said, that you map this, and let me assume that we want to map this on a quarter by quarter basis, right? So you come and say, okay, so I'm in Amman and my market is Jordan. Let me go and work between now and between the end of the first quarter on defining my identity, who I am, what I want to achieve, what's the message that I want to get out there, and then let me get into the news, right? Let me basically find a way or a method by which I can gain attention. And one of the things that I used to find important is that some businesses or some startups look at events like, let's say, Startup Istanbul or any other event that they might attend as an opportunity to go and meet with investors. It's an opportunity where you can showcase what you do. But really, another important angle that you always want to look at in terms of the events that you attend is, does this give you the opportunity to capture some sound bites, right? Or you can get into the narrative through these events by getting press coverage, getting an interview, meeting someone that can get excited about what you do, and then he or she might write an article about you in X market or in X place that you are interested in. So it's not just about showcasing, but it's about staying in the news, right? And it's important that you always keep that at the back of your mind. And as I said, you want to tell a story, right? So you want to dissect everything you do in your business into meal pieces. And these meal pieces become the pieces and the different parts of what you want to release to your audience. And your audience will always be, in this specific case, media and investors. And if you have an investor pool that you're aware of, you need to keep them engaged in what you do, right? Even if they're not investors today in your business, but they can always, and it's a small world, but they can always get excited. Recently I was sitting in a meeting, someone was talking to me about, in Amman, someone was talking to me about, their interest in X sector. And I had met this startup that continuously out of London that kept me in the loop of what they do. So I had something that I could share. So when I found the excitement in the room about this specific sector, I just popped up and said, you know what, you should go and talk to these guys, right? They're doing something quite interesting. I personally did not invest in that startup. The firm or the company that I work in did not do that also, but I got the news out. So you keep basically keep me in and keep the people that you want around you, because they could be potential ambassadors that can go out there and say, hey, this project is really exciting. And that's why you always want to, you're doing your product release. If you had a capital raise from friends and family, right? Or you had a capital raise from a VC, or you had a capital raise from an angel investor, push the news out, right? Share the nature of the engagement. Even if it was a non-financial transaction where someone said, I'll give you access or some sort of in-kind contribution, or I allowed you to enter this market or to meet with that entity. Again, it's part and parcel of you sharing that story. So you have to keep telling your story on a continuous basis. So now we're in Q4 2020. You enter into next year. The question you need to ask yourself now is, where am I? What am I going to do? And telling your story is not only about the business. It's also about the people who made the business. So you might be one founder. Hopefully you're more than one founder. So you're maybe 2 or 3 founders. So you want to go and tell the story of each of these founders, and you want to personalize the connection. You want people to really feel that they're invested in your business, even if they haven't done that, but they know your background. They know who you are. They know what you've gone through, what you've achieved, the milestones that you've done in the past, or the milestones that you want to take forward and you want to basically talk about. So you want to keep telling your story, but you want to also not limit it to the business and the startup itself, but you want to be very intimate with the people. And whenever someone joins, even if it's a junior individual, someone like he's just doing coding, try to make a story around that, right? Try to make a story around everything you do. And then, you might have another product upgrade, share that. If you're planning to do a product upgrade, talk about it, right? Keep people excited about what you're about to do and when you plan to do it, regardless if you did it or not. The point is that, if you came on and someone said, I read somewhere that you were doing X and you said that you did this and that, and you can easily come and say, yes, well, we face the following challenges, and you explain transparently what hiccups you faced, and we overcame them, or we couldn't overcome them, so we delayed the launch until X date later on. And you keep doing that, okay? So that's clear, right? You keep doing that, and every time you do something, you enter another market, you move from your campus to the city, you get into new offices, you join a new program. Keep telling your story, okay? And that's very important when we talk about when you want to deliver value for your business, right? And at the end, why are you delivering value? You want value because at one point in time, you're going to be raising capital. And if you do raise capital, you will be asked for a specific valuation. And what I always basically say is valuations are, to a large extent, even if it's private equity, there's an art to it. It's not just 100% science. And therefore, telling the story is going to influence, it's going to oil the discussions as you basically come down to the numbers and the nitty-gritty of the discussion that will determine, are you this much or that much in terms of value and valuations. The second thing, or the second part I'd like to highlight, and I'll stop here basically, and then if you have any questions, we can go into that, is to really have a discussion around what is the value that you have, right? And to put a number to it. Now, some people might say, well, should I think that far? Well, my advice is always that you should. Planning ahead doesn't take a lot of your effort, specifically when you're releasing this effort across months, where you're putting an hour a day or 2 hours a day or half an hour a day, even where you're thinking a little bit ahead about where you want to be. Where do you see your business growing, right? So if you said that today I'm a business that's going to, I'm a, you know, and why am I mentioning these numbers as just examples? Is if I want to say my value of my company today or startup is $1 million at the beginning of Q1 when I wanted to launch, regardless of the reasons or whatever, and we're not going to go there right now, but it's important to say that that revenue, and that 1 million, if you see that in Q2 you want to potentially attract people, or you might not even, but what do I need to do so I can see my valuation become $6 million, right? And maybe top it up or push it up a little bit more to become 8 million in the third quarter, or let me see it in, you know, $19 million in Q1 2021. So these numbers are just, you know, hypothetical, but the point is you need to set for yourself a set of, you know, as I said before, what journey are you going to tell? How are you going to tell your story? And you keep telling the story and you keep writing about it, but also you need to put some numeric examples and some numbers in terms of what is it that you want to do, when do you want to raise, and of course, associated with these valuations is how much money do you want to raise from the market, right? And is it 600? Is it 1 million? Are you going to release 20% of your company? Are you going to release 5% of your company? So, you know, what drives that? And as you go in these numbers and you start to think about them very much ahead of the moment, you need to think that, okay, under this 1 million, what's the revenue that I currently have? Do I have any patents? Is there any certification that supports it? Do I have a validating technology partner? What is the team that I basically have at that moment in time? What's the product lineup that I do, that I basically have created? And what are the markets that I exist in? And if you ask yourself these questions, you can more and more start to justify for yourself why you believe that you deserve this valuation. And the more that you can own the valuation and own the story behind that valuation and the logic and behind that valuation, the more you'll have a very nice and interesting discussion with whether it's an angel investor or if it's a venture capital firm or if it's a fund or anyone, right, that wants to come in and engage with you to understand why you believe in what you have achieved and how you've translated that achievement into a story and also into something that you can put a $sign to it and tag it with a $sign. So that's really what I just wanted to highlight as food for thought. It's a discussion where the takeaway that I want you all to have in mind is the importance of mapping forward or planning ahead, and that you draft a map like this and you see it, and then you start to support and deliver the different value drivers for each and every milestone of your journey. Okay, so if you have any questions, let's basically, you know, jump into a discussion and we can talk more about this thinking and the importance of it.
Yousef, I mean, thank you very much for this presentation. It will be highlighting for most of the startups, especially in every stage of startups, how to value their companies. But not only that, you have shared lots of steps for the startups. So let me ask you my first question. Also, I think the entrepreneurs should have the rest. What are the main, I mean, what are the common three failures, I mean, or three main mistakes that the startups do when you look them as an investor? Because you have seen lots of startups and there are common mistakes. Maybe startups cannot be aware of that, but it is very clear for an investor or for a mentor eye. Should you share some of the mistakes that these startups do, especially in different stages of their life cycle?
Well, I mean, a lot of the things that they do is well, at least from my perspective, my personal experience is that, you know, this is more or less a connected relationship, right? I mean, we know a lot of things out there. I mean, it's very difficult and people have gone, and as investors, we've made the mistakes, and we want to avoid making any further mistakes. So what we always do is we try to assess and understand, what did you promise before you met me, and what have you made in terms of promises for others before we had our first interaction, right? So it's always a highlight where, you know, you meet with someone who and you see a pitch deck that someone passed to you 6 months or 9 months ago, and then you know, by coincidence or by chance, you meet the same startup, or you met a startup 9 months, you know, today, and you know, I pick up the phone and I call someone else, and he says, okay, you know, let's say they said, I am part of this program. This investor, of course, I'm going to know, has made this amount of investment with me, right? And you know, I'm asking you for, let's say, $500,000 or $100,000 to invest into my company. Well, the first thing that I basically would do is generally I would talk to the previous investors, and I would tell them, can you tell me what are the milestones that they promised they would give you when they met you? Okay, and did they deliver on that? So you come and, you know, I'll talk to the investor before, they'll come back and say, yeah, well, you know, these guys, they promised me an arm and a leg. They said they're going to deliver this and that and a product and revenue, and they'll be a $1 billion company in 6 months or 9 months. And I take that to heart. I take that and I look at it and I study it and I see the gap. I mean, you know, you can always make commitments and you can miss commitments. That's okay. It happens. But by how much? If you said, you know, I'm going to deliver $300,000 of revenue in Q2 of 2020, and you delivered $5, then there's it's not an issue of a gap. It's an issue of you don't know what the hell you're doing. Or no, well, you know, he said $300,000. The revenue came short and it hit $180,000, right? So okay, and $180,000, not that. I won't scream and yell and run away. So I think making, you know, drafting, and that's why I keep saying, when you talk about your journey, you have to talk about the journey. Don't make it a surprise for anyone, right? If you were mapping your journey, talk about it. Don't hide what you've achieved and don't hide what you failed in. So when come in, it's not about you hiding the truth from me, right? Even if you were very smart and intelligent, and that's really what frustrates me when it comes to value and valuations, is even if you basically were successful in doing so and you spinned it, and I was not aware of, and I made the investment and I invested going ahead, it will be a challenge and an issue when things come to surface later on down the road, and instead of being a champion for you, I'll be basically a vote of no confidence in a way, right? So that's why explain yourself, be transparent, be very critical of what you've achieved. Don't hide anything. Just put it on the table, put it out there, and explain it. And if you've done that across the months before, then you build a lot of credibility. You build respect, and investors and founders. We're people at the end, right? We're two individuals talking to each other. So we want to respect each other. I want the founder to respect me, and I want to respect the founder. And there has to be a trust, a point of trust between us, where I feel confident that I don't need to dig behind whatever numbers that he or she gave me. So that's a very important point about the issue of transparency. Now, the other issue that I always highlighted, and again I'm highlighting here, is the lack of understanding of how much value do they want. What's their value? Sometimes they'll come and say, well, I'm raising $3 million and I have a value of 9 million, for example. So okay, I know that it's not about knowing the terms, but let's assume that they understand pre-money and post-money and whatever. But then you tell them, you're going to release 30 to 40% of your company now. Is this the right thing you want to do at this current stage? So I think one point is, it's not about the money and it's not about the percentage that you want to release, because sometimes both of these 2 points scare me and make me walk away. If you're, are you really looking for an investor, or are you looking for some cash I don't know, to do something with it. Because if you release 30% or 40% of your company and you're still at a very, very early stage, how much will you basically end up having 18 months down the road, right? So, and the second thing is, it's the breakdown of these numbers. What do you want to do? What have you achieved before? And they miss that. They don't talk about, they don't talk about achievements a lot. They talk about potential of market. Okay, I know that the market has $100 billion market potential. Okay, so frankly, I don't give a damn. I want to know, what have you achieved and what are the building blocks that you have done that can allow you to go and deliver that value going forward, right? So, and don't tell me that, I want to achieve $1 million of revenue. And do you know $1 million from 100 billion? It's nothing, it's peanuts. Okay, forget the 100 billion for a moment. Tell me, what did you achieve of that 1 million, right? If you said you're going to give it, you'll go deliver 1 million, did you deliver that number, right? And did you grow that number, that 1 million or that 100,000 or that even 10,000? Did you grow it by, the 10 became 20 and the 20 became 40 and the 40 became 60? Are you growing the number? Show me the baseline, okay, the absolute numbers, and show me that you're growing in these absolute numbers, because that growth is going to be very important for me when I want to make a decision. Are you really driving growth or not? So I think a lot of people that I have met, and they look good. They sound excited. They look interesting, but they don't show enough achievements to support their argument, right? And I think that's a lost opportunity for them.
I mean, very clear and detailed explanation. We have lots of questions coming up, by the way. So Mehmet asked, can you please suggest the best way to value the startups before and after generating revenues? So you have seen pre-seed startups and also revenue startups. Also, I think it depends on the geography. How do you value, and what are the best ways to value the startups in these stages?
I think one of the main points for something that's pre-seed, you don't have any money, you're coming with an idea, you're coming with a concept, is for me now, and we grow in experience, right? I mean, you and I have seen so many people a year ago, 2 years, 5 years, and probably you and I have also changed as we also grew and developed our experience further and further. Today, when someone comes to me that's pre-seed, a presentation, that's all I have, I'm giving a presentation, it's going to be 100% dependent on the people, the team, right? And legacy, experience. So if it comes and says, I've done this before, I just exited a company at X value or whatever, even if it's a small exit. I mean, people keep saying exits like, wow, we have to get these multi-million, $100 million exits. No, this individual might have created something really exciting in Amman or in Istanbul. Maybe he met someone down the road as a business or a company or a corporate, found a good exit, started and maybe sold it for $400,000, right? But the people he worked with, the investors, they were all happy. Someone might have, angel investors might have given him $50,000, and you came back and gave them $100,000 over that 50, and everybody's basically excited and happy. So maybe they have a track record, but if they don't, it is really about now 100% about the team. If the team is, and one of the things that I also add is the ability of the team to be technically capable of doing what they want to do. Okay, so if the team and not outsourcing and not telling me, well, my CTO is someone I'm going to employ, and I'm raising money because I want money to pay the CTO. I would not today. I'm not going to go there anymore, right? I am not giving people money to go and pay it to third party so that they can basically third party entities who will build their business. I need to see the technical mastery at the get-go in the business. And when I say in the business, it means that now I feel comfortable that if they were going to work on this for the next 36, 48 hours to fix a glitch, they don't have to have the headache of thinking, oh, I need to go and pay the freelancer more money to do that for me, right? And maybe the freelancer is even not he's busy, he doesn't have time for them to begin with. So that's a very important point in setting the value of those individuals. And what I generally do is I try, in being fair, is I look at these individuals and I also do my own, this is pre-seed, this is guys coming in and they're very much fresh. And I look at the opportunity of their experience, right? Like the opportunity cost. If these guys were working somewhere else, what would their average income be, right? So these guys are basically saying, we are now committed to this new business. That if we were working in the Arab Bank, or I was working in Tetra Pak, or I was an employee in Procter & Gamble, I would be generating, amongst us, the three of us, we'd be generating this much of income on an annual basis, and great. But in some cases, they're not ex-employees, right? They're students in the campus. So again, I would look about the opportunity that these individuals would have if they decided, rather than do something on, while I'm on campus, they would take an internship and do something else and join someone else. And so I try to formulate my own assessment based upon this mix of technical mastery, the opportunity that these individuals might have if they were going to go and pursue a job, if they were ex-employees, the opportunity that they walked away from, right? All of these elements play a big role in deciding how much do you want to give them in terms of value at the get-go, nothing achieved. An important point, whether it's something that's on a pitch deck or a presentation, or if it's 9 months down the road and you're meeting with them and you're talking to them, you have to, it's key and fundamental that they are not limited to their geography or their city. So if someone comes and says, I want to do X for Istanbul or for Cairo or for Amman, it's not going to work, right? So my first job, and I used to, I say this and I regret that I didn't do this very, very early on. So my first job was an HR manager, a recruiting manager in Procter & Gamble. We used to measure people against a set of metrics, leadership, initiative and follow through, creative innovation, communication skills, and so forth. So a set of, and we would measure people and say, well, you're either weak, moderate, strong, very strong, or exceptional in that specific attribute. But we never interviewed founders, right? So now I interview founders, right? I want to make sure that they have a track record of achievement. And that track record of achievement has to be coupled and combined with a focus that's not limited to their city, their country, and they're doing something that's solving a problem that everybody basically has. Okay, so if it's a problem they're in Bebek in Istanbul and they're solving the sewage issue with the municipality of Bebek, it's something that they can apply in any other municipality across the world and the globe. So that combination is very important when you want to attach certain value. Now, as I said, it makes a difference. Now, I'm not talking about, I registered for a patent or I got the patent, but you did something new and novel, right? You're claiming, make a claim that I designed something that no one else designed before, right? And I'm claiming that. And maybe we end up finding someone else doing it in Latin America, but you did something interesting and unique. So that's a very important, the differentiation when you attach value. And that's, like you said, Burak, you have a pre-money, pre-revenue, and then post-revenue. When we say post-revenue, it's not just post-revenue, it's the acceleration of revenue, right? So it's key that if you come to me and you tell me, if you tell me I am going to grow my revenue year on year, today, where I am today, I don't want to have a discussion with you, okay? If you tell me I'm going to grow my revenue quarter by quarter, In our world, in MENA, I'll have a discussion with you, right? If you were aggressive and you said, I will grow my revenue month on month, then you're really moving towards that 1%, 2% of the stars that you want to talk to. If you come and say, I am growing my revenue week by week, I'm growing it week on week, then you have all my attention and I want to listen to you, okay? And the floor is yours, as they say. So just tell me, what are you doing? And I want to join your journey, right? I want to be a part of the story. So I think it's just not the amount of revenue, but it's also how long did it take you to get there? And so I can at least forecast or extrapolate where will your revenue be 18 months down the road, right? Because if you come and tell me, at the beginning of the year, I had, and the size of the ticket, I mean, the size of the revenue, right? You might be biased towards business to business, or you made a deal that gave you $150,000, and you made a lot of small deals of $5,000. So if you did, the small deals were very small in their total, and you had this one big deal that gave you $150,000, I'm not going to be happy, because that's a biased outcome. I need to see a lot of these small deals, because that's what your model is all about. So it's you have to analyze your revenue. And the most frustrating thing that I walk into a meeting with is that, and it shows the lack of mastery, is that when they don't know their revenue, they don't remember their numbers. You ask a question and I need to check that. I mean, what do you mean you check that? You should be living with your numbers, right? You should basically be eating it, sleeping with it, having it for breakfast, lunch, and dinner. It's what you live with on a day-by-day moment. And you're the founder. You can't tell me, oh, I need to go and call X. No, you are the founder. All right. And as they say, the buck stops here. You're the guy I want to talk to, not anyone else. Right. So I think that combination helps me in guiding what type of value I give a business, if it's pre-money and if it's post-money, and the difference between the two situations.
Arvin asked a follow-up questions. I know that you have already invested lots of pre-revenue startups, but he asks, have you invested in startups pre-revenue, and what made you invest in that startup?
I mean, yeah, I mean, we have spent, and also we have invested in a lot of pre-revenue startups. I mean, and the main driving force is what I mentioned earlier before. It was the excitement that I saw in the team and the technical capabilities that they had and the problem that they solved, right? And sometimes it doesn't work, but they solved the problem. And for me, that was really exciting. Or they were at least coming and saying, we think we have a solution to this problem, and it's a problem that I can identify with. And it's something that they can say, this problem, there's so many other people that have the same issue, and I have a very unique solution to it. And when you say pre-seed, that's pre-seed, right? If someone came and said, what, I am doing the next, I'm copying this idea or solution that I saw in the US, and I think I want to do it here, that's not pre-seed. That's you're basically copying something and you think you have the capability to do it and the only reason, the logic behind it is that the language barrier, right? I mean, they're doing it in English, I'm going to do it in Arabic, or I'm going to do it in Urdu, or I'm going to do it in Turkish, right? And that's the only reason why you think you have something unique about it, is you're doing it in a different language. So that's not really exciting to look at anymore, the way that it used to be. And to be fair, some angel investors are not have changed. The definition is new also to us. I mean, let's remind everybody around the table, at least many of us, these definitions were not, they came to us, right? Angel investor. I mean, I always laugh when I want to translate angel investor into Arabic, right? I mean, we don't have something that describes an angel investor. And it's not like people don't invest before, but we don't think like that. So now we have seen some early stage investors who don't mind investing in lifestyle businesses, pre-seed, right? So they like the idea, they think it can grow, can work probably in the city of Amman. They have no interest of seeing it go elsewhere. If it does, great. If not, no worries. And they'll put a little bit of money to see how they can basically grow it. They have a portfolio of maybe 7 to 10 startups, giving them an average income of X. And they are very much focused on bottom line. They want this business to make profit, right? So they want it to become a lifestyle business quickly. And that happens also. So you have that situation. It's something that also I would encourage people to look at, friends and family, that I tell them, if you want to start moving into this, is why not test and build an experience around that also. But yeah, it's really, am I excited? Do I like the solution? Do I like the sector? Do I like what I want to do?
So Murad Son has a question. I will also a little bit add my comments on the question. On average, how many months required for a startup to increase its valuation 3x? Of course, it's not about months, but I mean, he also added how many multiples should the increase in revenues in order to make 3x valuation increase. So he added also some additional question to his first question. So, and also Murat's own question should be enlarged, such as when you do the presentation to an investor, when should you also change the valuation for the pitch deck, and how should it be?
Well, I mean, okay, so on the first question is how many months? It's not how many months. It's not that. That's the wrong way of positioning the question, right? It's not how many months so I increase 3x. No, it's what will you do to get to 3x. So what you do, you might do something that is a breakthrough in a month, and in 1 month you got 3x, right? I mean, so let me assume you're a pre-seed stage company and you came in and you want to do X. It's the milestone. It's what do you want to achieve. So the question is how many months? No, I mean, I just put it on a quarter by quarter basis because businesses in general plan by quarter, right? You are teaching yourself to become a CEO of a company. You're not a CEO of a company. You weren't a CEO yesterday, right? CEO is a big, big word. People get paid bucks, they get fired, they get stamped on, they get beaten up, because it's not easy to go on to your quarterly earnings and meet with your investors and tell them I missed the target, right? It's not easy for a CEO to do that in real life, in a business. So you need to basically, so the reason I said let's go quarter by quarter is not because that's how you deliver value every 3 months. It's just getting ready for every end of quarter. I need to go and update my shareholders about what I have achieved. So the answer of your question is not on average how many months. No, it's what are the milestones. Ask yourself, what are the milestones that will drive your value to become 3x? Okay, and it's a combination of all these things I mentioned before, right? It's the revenue, it's the team, it's the IP, it's the market share, it's the velocity of the curve of the revenue growth that you're achieving. It's a formula. You have to write this formula, and every startup has its own formula. And our role is sometimes, if we're not wearing the investor hat, if we're helping you, is to try to write this formula together so that you know it, and then you use it later on to guide you in everything you want to do. The second question was about what? I'm sorry.
I mean, it is a follow-up question. So what should be done to make the 3x? You also answered.
I mean, yeah, I've answered that, I guess. Yeah. So another question here. Shall I take a question that I have?
I mean, yes, you can also check, but let me read.
Adam Saad, basically, right? You're saying there is you are a business. It would be so wrong to give you one piece of advice. But if I wanted to go ahead and try to give you one piece of advice, is focus, right? And every CEO, and I don't know how many of you here across the table have gone ahead and enjoyed and read The Art of War by Sun Tzu. Right? I mean, I really tell you, go pick up that book and read it. You can find it online. It's just a fabulous exercise, and it's a mental exercise. It's an exercise where you have to think. So focus, and focus is so important, because when you get distracted, you drown. When you get distracted, you miss, right? And I do that. I mean, I basically, when I lose focus as a person, as an individual, I find myself doing 1,000 things and said, hey, Yousef, you gotta focus, man. I mean, or sometimes when you're not focused, you exhaust your team. That's something else people tell me sometimes, right? Is, you can run at 100 kilometers. You're so excited, you're so pumped up, you want to do something, but the rest of the team can't, they just can't. So you exhaust them. When you exhaust them, they get bored. When they get bored, they leave you, right? Even if you're a great guy, but you have to have that balance. Stay focused is what I would really tell you to be successful. That's for you and for us and for everybody around the table.
Mohammed, there's a question.
We're spending most of the time. Yeah, Muhammad, I'm reading it right now. I mean, you're highlighting a very important point, right? It's you're creating a tech, and of course R&D is a big word, right? Research and development is a big word. People spend millions of dollars on R&D, and that's the type of investor that you're looking for, right? You need to find investors that are willing to appreciate and understand the R&D that you're doing, the research that you're doing, the topic that you're doing, right? I mean, I happen to be helping out on an agri-tech fund here in Jordan, right? And because of the nature, if you came and said, again, draw the journey, tell me, I'm going to be doing research and developing the product for the next 18 months. So there's no market, there's no revenue, there's nothing. And we might come out of this exercise with nothing. So maybe Morocco is not the right destination for getting R&D grants. Probably you need to start to create that balance of approaching people that give R&D grants, right? I remember spending time with the European Space Agency, and they were giving grants between €500,000 to €2 million. These were research and development grants, they're R&D grants. And the beauty of this, if you qualify for any entity to give you a grant for your R&D, that is news. Like I said, tell the story. That's a breakthrough. That's a driver for valuation. That's an attractive element to bring investors on board in the moment when you're building the research, when you're developing the product, and you don't see any revenue coming in, except maybe 18 months even later. So it's all about the nature. And if Morocco is not the best place to get R&D grants, maybe move, right? I mean, you need to basically consider walking away and discussing. I remember a couple of companies that I met in a place called in Turkey, and they had moved. And why did they move? I mean, they were in this something called park or science park, or whatever. And I was asking, why did you move here, right? Because, well, we are part, and they were European, and they said, we're European, but the line to get a grant in France or wherever they were, or in Germany or in Belgium, whatever, is so long. But I had the chance to go and apply for a grant similar to what I wanted from a Turkish R&D fund, and they gave me that on condition that I moved my team and the R&D that I wanted to do to Istanbul and the outskirts of Istanbul. So you have to find that balance by researching and understanding exactly how you can do it. Shah, you're saying, how would you evaluate a pre-seed fintech startup that doesn't generate revenue if it has 2 tech co-founders? How would you evaluate? I mean, this is a tough one, right? I mean, you have to, like I said, you have to share a lot of information. How do I evaluate it? I look at, you said, if I understood what you meant here, if neobank is your validating partner, okay, let me say, from what I understood, that neobank said, I like what you guys are doing, and I want to, and they have something called a sandbox, and they selected you. So first, I'm going to ask a question like, how many people applied to neobank? Okay, are there 100 people and they selected only 7, and you're one of the 7? That's a way that I would evaluate what you've achieved because someone else looked at the tech. I would pick up the phone and talk to the CTO in the bank itself and tell them, how did you select this startup? Why did you select them? What do you expect from them? Within the bank itself, what can you achieve in that bank, right? Are you going to buy first buyer of their tech? Are you going to be an early adopter? Are you going to help them meet customers in your customer base so that they can sell directly into them. So all of these elements will play a role in me trying to understand where are you going as a journey and the potential of doing so. Muhammad says sometimes when we sit down in a table with investors or businessmen, they give opposite advice. So usually left confused. And that's spot on. If you don't map your journey, okay, if you don't map your journey, people, because you just said, I'm sitting around the table, I'm having some coffee and some drinks. If you're doing that, yeah, I love to hijack your journey, right? Some people have ego. Don't take them as investors. If an investor is offended, tell them thank you, ma'asalama, yani. I don't need your headache, right? Because they sometimes hijack your journey. They hijack your vision. They send you, I'm investing in you, okay? And I don't know, I'm not gonna do your job. And if I'm gonna do your job, then why the hell am I investing with you? I'll go and do the company myself, right? And find someone else to do it. I'll employ a CEO with the money that I might give you, for example. But the challenge really is about finding the investor that is there to guide, nudge, help, but not hijack the journey, right? You know that journey, not me. And that's a very important point because, yeah, this guy comes in and throws this point of view. And one of the things I used to find in accelerators, we used to sometimes send our startups to meet with CEOs. And then I stopped that. And I stopped that because CEOs came out to show off, I know how to do this business, right? And at the end, they gave conflicting messages. And the CEO of this company gives them that strategy. The CEO of that company throws that strategy. So instead, I used to say, let them meet with subject matter experts, like middle management, people that don't have a lot of ego and who can give knowledge, right? But at the end, simple point, Muhammad, if they're going to start giving you, if they're going to be offended, tell them, ya akhi, kathar Allah khairak, shukran, ma'as-salama. That's an Arabic statement for those that didn't get it. So, all right.
The last question from Jose.
So you have a SaaS and generate good revenue, and we are on the right traction. Then we develop new technology, fintech technology, and all right, and then we monetize the users. We've got losses a year. All right. I mean, now we launched the product, go live, starting to monetize our existing users. We are now looking for investor. Will that impact our losses last year? That's the decision. Again, I mean, I would love to see a company that is always profitable. And of course, if you're profitable, you might not need capital as much as others might need it, right? You need capital because you have losses. So that growth capital. Sometimes no. I mean, it's not. I'm not advocating or pushing that you have to have losses. What you do have to create, because you're a startup, right? You're a startup, and there's a lot of these big dinosaurs around you. And these dinosaurs, when they move, right? These when they move, they. If you cannot go exponentially fast and quickly to stay alive in this very aggressive ecosystem that you exist in. So that is why you have to justify the losses. And it's just justification. Just have a good reason why you're having these losses. And again, are you on track? Let me say this again. Are you on track on losses? So as a CEO, I can go into a business that I'm running and say, I am expecting and forecasting to lose $300,000 by the end of the year. That's my target. That's my commitment to you. And I'm expecting to lose maybe less or even more, $400,000 by the end of next year, okay? And the monthly burn rate or the monthly losses that I will have is this much. And the cash flow is to come in and fill these points, right? If you are on track, I'll respect you as a CEO or you as a founder running your business because you know what you're doing and you can explain to me why you have these issues, okay? And then it'll be a judgment call. Do I like your explanation or not? And that be something that you can take up with the investor independently, but always work very hard to explain what you do. And I'll bring it back to the storytelling. Even if you're, go to the newspaper, your local newspaper, your local tech guy who's making stories on startups, and share with him or with her why you are off track, and spin it, right? And make a story around it. You know, I was looking for someone and we missed it, and the guy came in and he resigned and everything left. And with that, we can basically understand more about the business.
Yousef, thank you very much for your valuable time. It was a great journey with a 1 hour long. There are probably lots of questions from the startups, but I mean, it was very supportive for the all entrepreneurs, I think. And it was full of 1 hour. Thank you very much, and have a great evening. Stay safe and healthy.
Likewise, thank you so much. Thank you all, and good evening. And stay, I mean, as they say, stay positive, test negative.
Thank you very much. Bye-bye. Have a great evening.
Likewise, bye-bye.